Okay, so let's just digest this report. Let's talk about what happened during Asia session. Let's talk about what happened during New York. Lots of fundamentals to digest over the past 24 hours. No significant price action, albeit I do want to point out one thing that I mentioned on yesterday's Zoom call. We're going to fixate our attention in this report on the Japanese side of things with the inflation coming up and Governor Ueda's most recent speech. And then we're transitioning over into the US data front. What happened today? I believe we still have Fed Bowman speaking. I don't know if that has dropped since I've been on the call with you guys. I don't think it does till later today. So we will obviously, of course, be paying attention to any of her comments on the economy or the policy outlook for the Federal Reserve. But overall, right now, so far, we've proven accuracy with our fundamental updates. I've been attempting to show you guys why it's so imperative that you pay attention to these things. And sure enough, we'll start here. So in yesterday's Zoom call, I highlighted for you guys yesterday, I mentioned the divergence between the Bank of England and the Fed still stands, and not to take any aggressive sells just because GBP USD is in a premium. If you guys remember, whoever was on the Zoom call yesterday, I mentioned that. I said, oh, 9 years of experience in this market, and every single time these retail traders think that just because price isn't a premium and they want to sell, they think the market's going to, reflect that. Don't think that way. And sure enough, I mentioned yesterday, if you go to 25 minutes and 20 seconds in yesterday's Zoom call, I talk about how if the market breaks above the 133,600 and retests it, that we could look for some higher targets on GBP USD. Sure enough, if we fast forward into today, New York session, I had a nice little tiny scalp. We retested right at the beginning of the session, right when the market opened at in between the manipulation window. I had some nice alarms go off here after that retest. I put a nice buy stop and rode that wave higher. So I'm just attempting to show you guys that right now we still need to be playing this divergence between the two central banks. After the data came out today, weaker for the US front, we're still seeing that divergence hold weight. So again, we've been riding this wave since pretty much the beginning of August, where we caught buys on GBP USD from those weekly lows weeks ago. And that sentiment has yet to change. We will be at the forefront if that sentiment does change, and we'll understand when and if it does. So I'll continue to update you guys on that. Yet again, just proving accuracy. We'll get into that in just 1 second. Let's talk and start from Asia session. All right. So yesterday, after we ended the Zoom call, I left you guys with mentioning that we had Governor Ueda's speech on the forefront to be paying attention to, and that later this week we had Japanese inflation as well to be paying attention to. So starting with the Asia session, because we got Governor Ueda's speech, we had a notable speech from Governor Ueda. So let's talk about this. Hawkish signals from the Bank of Japan, Governor Ueda, reveal a shift that investors must pay close attention to, especially concerning the Japanese underlying inflation. Governor Ueda reiterated that the Bank of Japan is prepared to raise interest rates if inflation trends towards the 2% target. A significant move for an economy that has been encouraged in near zero rates for years now, right? Since pretty much 2013, I believe, if I'm not mistaken. They've been in a low or zero interest rate, negative interest rate environment. Ueda pointed out that the Japanese real interest rates remain negative, a long-standing strategy aimed at boosting economic activity and price growth. However, with inflation rising across various sectors, the Bank of Japan is becoming more vigilant and prepared to adjust borrowing costs. Key highlights of Ueda's speech include emphasis on uncertainty around both economic and price developments, reflecting the Bank of Japan's flexible stance on policy shifts. Ueda also touched the importance of monitoring corporate profits, wage-setting behaviors, and capital expenditures, signaling that inflationary pressures are firmly on the Bank of Japan's radar. The reason why I included this in the report is because, yet again, it signals to us as retail investors, we need to be moving in tandem with the money, with the institutional order flow, and what is their focus on. They tell you in these reports, their focus is on inflation, right? Additionally, he underscored the need to closely watch service price data for October. So we need to be paying attention to October data, which will be a key factor in determining whether the Bank of Japan will raise rates at its next meeting. In summary, Governor Ueda's comments indicate a more hawkish outlook, with the potential rate hikes still remaining on the table if inflation continues to accelerate. The Bank of Japan will likely wait for November service price data to make a more definitive move, potentially pushing any rate decision to the December meeting. Excuse me. So, as of right now, we can see that the Japanese yen is still creating higher highs and higher lows, where we're failing to break beneath previous monthly lows. As long as that remains, we're going to most likely see investors refrain from taking aggressive bullish bets in the digital asset ecosystem. Or inversely, in the total cryptocurrency market cap, what have we seen month over month since March? We've seen the total cryptocurrency market cap continuously make lower lows and lower highs, failing to break previously monthly highs. As long as we maintain this bullish order flow on the yen, we can assume that the total cryptocurrency market or risk assets across the board are going to maintain and follow suit as we see more demand for safe haven assets like the yen and less demand for crypto. All right. So, right now, what I'm watching to see some bullish impetus or any type of more demand for the total cryptocurrency market cap is if we did see later this week and heading into October lower or steady inflation on the Japanese front. That would most likely lead to a scenario where, remember, I mentioned to you guys these daily highs coming into play. We see a failure to break above these daily highs, and we continue this overall pullback or profit taking on the yen. We break a September low and we start to head back down towards the August lows. That would create an environment of risk on, in my personal opinion, as it would push back the sentiment or ease the sentiment that the Bank of Japan could hike rates, further unwinding the yen carry trade, which would allow for a more favorable environment for crypto. So, how that would most likely reflect in crypto is if we see a further decline in the yen strength, is we could see this turn into a higher low, break above higher, starting to target the August highs, or we could just break above where we've just most recently stalled out and continue the overall trend from the September low. Inversely, this week and as we head into October, if we see the opposite of that scenario that I just mentioned, and we see higher inflation, sparking more concerns that the Bank of Japan might hike rates at their next meeting, or as we head into December, and we see more yen strength continuing to hold these two previous support ranges, primarily looking at the September low, that means maybe we see another further drop and a bounce from these most recent lows and a correction of this downside move, more inflow into safe haven. That's most likely going to result in an outflow of risk assets, whether that's a liquidity grab above highs and a decline, or a continued decline from where we sit. So that's one factor that I'm paying attention to on the Japanese front and the risk asset front, outside of any geopolitical tensions or risks that could weigh on risk assets. Back to the report. So right now, the total cryptocurrency market cap does appear to be in a holding pattern as investors await key data before making any aggressive bullish or bearish moves. The total cryptocurrency market cap has seen an intraday decline as of time of writing this was about $5 billion, but it remains well over the $400 billion mark, higher than the September lows of 1.8 trillion, which is currently still optimistic. Currently, the market is hovering around 2.17 trillion, signaling indecision as traders assess upcoming economic reports, which is our primary focus: the Japanese inflation, the US GDP, unemployment, and the US inflationary figures that we get on Friday. All right. So as of right now, there's no sentiment change. The market is still pricing in the possibility of a rate hike from the Bank of Japan, which is refraining investors as of right now from taking aggressive bullish bets as the yen is still holding and maintaining this supportive range. We now know what we would ideally like to see more input or inflow into risk assets is we would like to see further outflow of the yen. But right now, that is to be determined. this would be the most favorable environment to see more price appreciation, excuse me, in crypto. Right. And keep in mind that we have not seen the total cryptocurrency market cap since March, February of this year break above another previous monthly high. So if we did see an environment where the yen sells off or comes down into those previous discounted areas, and we start to trickle up into those August highs, but then we get back up to these August highs and we start to see rate hike fears, or recessionary fears, or global war or tensions escalate, we know that that is a signal to start taking some profit on any buy positions that we're in or any positions that we're up in, because the market is just simply coming back up into a premium, right? As investors with much more money than you and I, under those conditions, would most likely start taking profit at a premium. Now, inversely, if we come back up into these areas and the market mood is extremely risk on, the yen continues to depreciate, rate cuts via the Federal Reserve remain on the table, right? Recessionary fears aren't sparked in the market, and the geopolitical risks ease, meaning we see, I don't know, maybe some ceasefire talks or something like that, then we can continue to hold on to our bullish bets and hopefully break above these previous August highs, which will mark for the first time since the beginning of the year that we broke above a previous monthly high. And then we can start to look forward to the future to possibly create a higher low and a continuation move higher. But that is yet to happen. We need a fundamental environment for that to take place. And as of right now, the markets are still uncertain. They're still treading carefully, and we just still need to be mindful of these conditions. Okay. So crypto for now out of the way. We'll talk about later what it is, more focus, more in depth, excuse me, of what I'm paying attention to. Let's talk about the US session. So rolling into the New York session, all eyes are still currently on the up and coming comments from Fed Speaker Michelle Bowman. Meanwhile, some doubt US economic data, meanwhile, some downbeat US economic data was weighing on the dollar today, reinforcing expectations that the Federal Reserve may adopt a more aggressive rate cutting stance. Key US data that came out today. We had the CB Consumer Confidence, or the Conference Board's Consumer Confidence Index, which fell sharply in September to 98.7, down from 105.6 in August. So can someone tell me whether this shows signs of economic expansion or economic contraction?
Contraction.
Good job, right? Economic contraction. I just want to make sure you guys understand the vocabulary word. So this shows a decline in economic activity. This shows a decrease or a dwindling economic activity, right? Contraction, not economic expansion, which tends to weigh on the strength of the dollar as investors start to price in a higher probability due to dwindling economic activity of a continued aggressive rate cut cycle from the Federal Reserve. Both present situation index and the expectations index saw declines, with consumers becoming more pessimistic about future business conditions and labor market prospects. Then we also had the Richmond Federal Reserve's manufacturing index, also reflected weakness, with the composite manufacturing index dropping from negative 21, pointing to sluggish activity in September. This weaker US data, combined with the recent dovish comments from Fed officials that we got yesterday, with 3 Fed speakers yesterday contributing to the dovish sentiment, contributed to the drop in the dollar today, which hit an intraday low of the 100.521 key psych level. This shift has further supported the Great British Pound up against the US dollar, as the divergence between the Fed and the Bank of England policies continues to favor the pound for now. The Great British Pound against the US dollar saw another intraday high, nearing the 1.34 level. So in summary, we just talked about the hawkish tone from the Bank of Japan, paying attention to the inflation data for future prospects and directional bias on risk assets in the Japanese yen. We are awaiting further inflation data later this week and then heading into October. For the cryptocurrency market right now, the market is stalled as investors await further data. You can see today that no investors took aggressive sells or bullish bets. That's primarily because we have some important data set to come out, which is going to sway investor sentiment. And then on the US front, we had dollar weakness, which was downbeat by consumer confidence and manufacturing data, coupled with dovish commentary from previous Fed speakers. As we head deeper into the week, market participants, we should remain focused on the Japanese inflation data, like I mentioned, upcoming US reports like the GDP, labor market, and inflation data. And then any central bank updates via any speakers from any of these major central banks that come out later this week. So moving forward, some of the key things that I'm paying attention to, you guys have those here in this report, is the Japanese inflation and yen carry trade risk. Obviously, of course, what would favor a better environment for risk assets to continue to flourish is this risk of a yen carry trade further unwinding caused by a hike via the Bank of Japan. Is that easing? So we would need to see lower inflation on the Japanese front. Any higher inflation readings later this week could spark those fears, further strengthening the yen and support rate hikes at the next meeting via the Bank of Japan. Something else I'm paying attention to is the US data and recessionary fears. So even though, because this is where it kind of gets confusing, we had weak US economic data, which has been previously supportive of rate cut expectations, and it is, which typically tends to benefit risk assets. I wrote here for you guys that it is important to recognize the potential downside to risk because continued weak labor market data could spark recessionary fears. If you guys remember on August 2nd, right? So if we just go back and we look at the total cryptocurrency market cap, okay, there were a couple of different factors here in this area that created this massive sell-off and risk. I'll tell you guys what two of them are, but I want somebody to try and answer what the third one is. So first, we had on July 31st, we had the Bank of Japan hike interest rates. At the same exact time that weekend, we had geopolitical escalations and tensions in the Middle East. I don't remember off the top of my head what exactly it was, but I remember breaking headlines on the Middle East geopolitical front, creating fear, uncertainty, and doubt. And then August 2nd, if anybody remembers, it was a Friday. We had an extremely important report from the US side of things. And that report sparked recessionary fears. Can anybody tell me what that report was?
Bad, bad NFP. Is it NFP? MPF, NFP.
Good job, Michael. Yep. Great job. It was the horrible NFP print. It was one of the worst NFP prints that we had all year, and it sparked recessionary fears. So the reason why in this report I'm trying to tell you guys to pay attention to this is because even though we're seeing weak economic data on the US front, which tends to benefit supporting the narrative that the Fed is going to cut rates, and we know a low interest rate environment tends to benefit risk assets, we still need to be mindful that in the short term, if horrible labor market data prints again, meaning that we get the next we get the next NFP print at the beginning of October, if that print comes out horrible, it could spark further recessionary fears. And that could create a temporary downturn or profit taking in crypto as the market seeks safe haven in the short term. And then long term, we then again flip bullish. So just be mindful of that. Any weak labor market data could continue to spark recessionary fears like it has in the past. And that can temporarily weigh on risk assets, as I wrote here for you guys. Even if the interest rates are expected to decline, investors need to strike a balance between seeing lower rates as positive for risk appetite and understanding that persistently weak data, especially on unemployment, could stoke concerns about broader economic health, which tends to temporarily, again, that's why I highlight temporarily weigh on risk assets. Okay. Just like it did back in August, right? We saw the sell off and everybody was fearful. Everybody thought crypto was going to zero. I know you guys remember the headlines. Oh my gosh, right? Blah, 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 blah. But now look, now here we are in September, and anybody that bought that dip is in profit. All right. So if we did see another scenario like that unfold, because remember, I'm still projecting and I'm still, until we start to see a break above these monthly highs and we start to see bullish order flow and the environment change 110%, driving risk on sentiment, I'm still going to keep in my mind that I think the market makers are pushing price down into this previous consolidation range. And that puts us at about 1.5 trillion before we see the correction complete. Because to me, this is just a higher time frame correction, right? This is just an explosive move, and the market's correcting that to push price back down into a discount to then reaccumulate orders like they love to do and then buy again. Until we break above these highs, that's what I think is going to happen. So obviously, of course, we'll change that as the time goes on. All right. And anyways, to continue, what else am I paying attention to? As a GBP USD trader, I'm still paying attention to the Bank of England versus Fed divergence. Now, week after week after week, we've seen some aggressive bullish moves on GBP USD. Yes, we are in a premium. So is it smart to continuously ride this wave aggressively? No. Wait for the data to come out and adjust your strategy accordingly. We have GDP figures set to come out tomorrow and Thursday. We have unemployment. We have inflation on Friday. So don't just sit there on GBP USD just because over the past consecutive couple of weeks, it's been easy to ride the train to the upside and think that it's going to continue higher and higher and higher. Allow the environment to unfold, digest that data, and trade accordingly. So, for example, if later this week, considering that the market sentiment right now is holding on to the narrative that the Fed is going to cut rates more aggressively, which is driving more demand for the Great British Pound, if that scenario changes, right, and we see higher GDP figures, resilient labor market data, and we see higher inflation, what is that going to do? That's going to change the current sentiment. That is going to most likely spark some demand for the dollar, and it's most likely going to result in some profit taking on the Great British Pound. So make sure that you're reacting to that and not just marrying a bias because it's been easy to ride the buys on GBP USD for the past consecutive couple of weeks. Adjusting to the changing market dynamics is what we need to become skillful at. All right. Other than that, I listed a couple of different other things. One thing I didn't add in this report that I will be paying attention to is the geopolitical risks. Obviously, of course, any black swan events or any new major announcements that create a sense of fear, uncertainty, and doubt, or any optimistic announcements with a ceasefire potentially on the table or something like that, that could drive more investor demand for risk assets. But outside of that, you guys have this report. Make sure that you read through it, that you thoroughly understand it. And outside of that, I think that's all I got for you guys. I've been talking to you for like an hour and a half now. So hopefully that enlightened you and allowed you to understand where we're currently sitting at via the market perspective. Tomorrow, let's just recap this real quick. What do we have to be paying attention to? All right. Wednesday is when that Bank of Japan core CPI comes out. And then Thursday, we have the Tokyo CPI. On the US front, UK front is quiet the rest of the week. All right, on the US front, we do have some new home sales, crude oil inventory. So tomorrow, outside of being a futures trader, if you're Justin and you trade oils, tomorrow might be a relatively quiet day. Thursday, we have the final GDP, unemployment claims, core durable goods. So Thursday, after the data comes out, because this is going to be one of those days that's extremely volatile right when the data comes out, this is how they get you, okay? Where the market will be going one direction, and then boom, right here, you see an hour later at 8:20 a.m., you have Fed Chair Jerome Powell speaking. His sentiment and what he says could completely shift the entire market direction. So if you're going to be trading Thursday, thinking that, oh, because there's a whole bunch of high impact news, I'm going to catch trades, that's fine. But make sure that you're mindful of what Jerome Powell says after this data comes out, especially if you're in positions. All right. Then Friday, obviously, of course, we have the core PCE price index, and hopefully we see lower inflationary readings prompting further rate cut bets from the Fed, which, in my personal opinion, would continue to create a risk on market sentiment. Hopefully that combined with lower inflation from the Japanese front is the environment that we get, because just like you guys, I'm fucking tired of seeing sell-offs in crypto and dead cat bounces. And, I want to see some shit like this happen too. So anyways, blessings to you guys. If there's no questions, I'll let you guys go.
Thanks for the chat.
As always, man, you guys take it easy.
Peace.
Cheers.